All right, a grapevine-based company is at the heart of a financial controversy that, boy, a lot of you have been talking about. It's the video game retailer GameStop. Now, we talked a lot about this yesterday as a slew of amateur investors bought into the struggling company, sent stock soaring. That overthrew some hedge fund billionaires who were shorting the stock, trying to make money off of a dip. The trading site Robinhood, it suspended purchases yesterday. TD Ameritrade also restricted transactions. Merrill Lynch as well. It seemed like all the brokerages had some restrictions. So the big question is, what'll happen today? I want to say good morning to Money Manager Bill Dendy, who is here to help us sort it all out. I appreciate you waking up early with us.
Mark, it's a real pleasure to be with you. And you're right, it's a very exciting story because for the first time, we've seen the little guy take on the big institution and effectively drive a lot of guys out of their short positions. Because as the stock started going up, they got scared. They had to cover their borrowed positions, which pushed the stock even higher, which made people even more excited, which caused more purchasing, which is a runaway market. And that's kind of good if you were in early enough, but that is leading to some prices that may not be sustainable or reasonable, and that's scary for the big brokerage firms, and it doesn't create that stable market environment that you want your market makers and you want your institutions to be able to ensure. So it's got a whole lot of controversy around it.
Well, so we saw trading halted on a number of stocks. You even had stocks in the S&P 500 like American Airlines that I know Merrill Edge put some restrictions on. The brokerages said they did this to protect traders, but a lot of those traders said, hey, this felt like market manipulation because it allowed the short guys to get depressed prices. What's the real story?
Well, it's a combination of challenges that if you're responsible for making sure we have orderly markets and you see something that's not orderly, you can stop the trading. But if we don't halt the trading across all firms, if you have some firms that are primarily used by the individual small investor and other firms that are used by the hedge fund traders do different things, you create an unbalanced system.
Real quickly, Bill, we saw talk of oversight from the SEC, congressional oversight as well. You had AOC and Ted Cruz on the same side of an issue. What could they possibly do?
Well, they could stop trading in a stock for up to 10 days. And if they stopped it for everybody, that seems like the fairness that people are looking for. And if they did nothing at all, I think market basics would finally level this thing out. A lot of people are investing for their first time, excited at how they can get in and push a stock even higher and make even more money. But eventually, if you're the last person out, you lose money. And a lot of people who got in thinking that this is a great deal through social media might get that little sting that it takes to learn that markets long-term will come to fair values. And I don't like outside influence on the market, but sometimes when you have this crazy euphoria on the way up or down, we do expect government agencies or the regulators themselves to step in and slow things down so people can take a breath and then start looking at what's the real value of a company. And I love GameStop, but this is getting outrageous when you have this much of a swing.
Well, I have a feeling this story is just beginning. Bill, thank you for your time this morning. And much like casinos, the house always seems to win.